Hello and welcome to the Look Ahead with me, Fiona Cincotta, Senior Market Analyst at City Index, looking ahead to Wednesday, the 4th of June. So in the European session, we've got UK and Eurozone services and composite PMI data. These are the second readings. They don't tend to be as market moving as the preliminary readings. US session, we've got Bank of Canada interest rate decision and also US ISM services PMI. So let's just start by talking about the Bank of Canada. Now, the Bank of Canada is expected to leave interest rates on hold at the 2.75%. Basically, the meeting comes after stronger than expected growth across the first quarter of the year. But that's basically as US companies were rushing through orders to get Canadian goods into the country before the trade tariffs kicked in. So that could well weaken going forward. Also, expectations of or lower household spending and weak domestic demand paints a weaker picture for growth going forwards, as well as the fact that Trump's obviously doubled those aluminium and steel tariffs to 50%. So all in all, the economic outlook remains pretty weak. We've got inflation more or less in line with forecasts. So the Bank of Canada will want to really see, I think, or wait for more information regarding the outlook as far as trade tariffs are concerned and the impact that they're having on the economy before cutting rates further. The market is pricing in 2 more rate cuts this year, but as I said, chances of one happening in the meeting tomorrow look pretty slim. Now, this is US dollar, Canadian dollar that we're looking at. We can see that this pair has been falling, losing ground, trades in a falling channel, mainly here to do with the weaker dollar that we've been seeing, I think, rather than any fundamental strength in the loonie. But as we say, we've seen the pair, it failed to push above the 200 SMA. That's at that 140 level, key level, and it has rebounded lower. We're testing here around the 137. Now, if we do hear the Bank of Canada sounding a little bit more cautious about cutting rates further and wanting to adopt this wait and see stance, then that could actually benefit the loonie, and we could see this pair fall closer towards the 136 level, and then below that we'll be looking to the 134.50, which was sort of the lows that we saw in September and October last year. Now, if we hear of a more dovish sounding Bank of Canada, who are very concerned about the outlook and may look to be cutting interest rates at a faster pace, then obviously that would cause the loonie to weaken, in which case we would expect to see this pair potentially push higher. Again, that would depend, though, on what's going on in the US dollar. Levels to be looking for on the upside, 134.40. That was the high that we saw just at the end of May. And then above that, this is the key level. That key level is the 140 level, where buyers would need to get above really to be gaining traction above there. Now, as far as the US dollar is concerned, do have the ISM services PMI data tomorrow. It is expected to show that services improved in May to 52, up from 51.6. But there is potential for some downward surprises as far as data is concerned. Obviously, this is a month where we've seen the impacts of trade tariffs come through. We just need to have a look to their manufacturing figures that we saw released yesterday that were considerably weaker, or that were weaker than expected. So just be cautious. I mean, the market's going to be watching for signs that US data is starting to weaken due to the impact of trade tariffs. And if we do get weaker than expected data, then that could, again, favor the downside in this pair. Other pair I'm just going to take a quick look at is Euro US dollar. As I said, we've got the PMI data. We're going to be looking at Euro US dollar quite closely over the next couple of days, given that we've got the ECB meeting later this week. We had some inflation data out from the Eurozone today, was weaker than expected, dropping below 1.9, dropping below the ECB's 2% target level to 1.9. This is the second time since 2021 that the inflation rate has fallen below the that 2% level. And just think, I mean, it's fallen considerably from a record of 10.6% just a few years ago when we saw Russia invade Ukraine. So as far as what all this means for the euro US dollar, we have seen a little bit of dollar strengthening today. I think that's more of a technical rebound, and the fact that we've seen trade worries ease in the fact that there hasn't been so many headlines from Trump today. But I think the outlook for the dollar does remain weak over the longer term. This is what's being noted by investment banks across Wall Street. So just as far as levels to be watching, it's back within this sort of trading range that we've been trading in for some time, back below that 114 level. On the downside, watch out for 112.80. If buyers can get back above 114, then that would bring 115 into the level. But I mean, I do think, keep in mind that the ECB is relatively dovish, expecting to cut rates again on Thursday, potentially again later in the year. And that could mean that any gains in the euro could be stalled. Then just finally, having a look at the S&P 500, we've got that US data, as I mentioned. The S&P 500 is really stalled below the 6,000 level. So we're just tracked. We've recovered from the 5,800. Can't get over the 6,000. So we're trading in a little bit of a holding range, potentially waiting for further data. We've got non-farm payrolls this week as well. We've got US ISM services tomorrow, ADP payrolls also coming through later in the week. So there are plenty of figures for the market to be catching on to, as well as headlines surrounding the trade outcomes or trade deals, which is what the market's looking out for, rather than further threats from Trump of more trade tariffs. So if we do get some upbeat data, maybe we'll be looking for a break above that 6,000. That's what the market will be looking for a move towards that 61,030 record highs. Weak data, concerns over the outlook for the service sector, which is the largest sector in the US economy, could bring the 200 SMA at 50, just below 5,800 into focus. If we get a break below there, then sellers could gain traction. So I hope that you like everything that you have seen. And if you have, then please do give this video a like. For more videos like this, please do subscribe.